What's up, NIO family? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with NIO, Tesla SPY, and the overall market. I'll talk about some big earnings that just came out. Another catalyst is going to be very huge for tomorrow, and what you should be watching for as time goes on. But just remember that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Webull link. If you deposit any amounts of money, you're guaranteed 12 free stocks. If you deposit $500, you're guaranteed 20 in total. Deposit $2,000 more and you're guaranteed 40. The offer ends very soon in just about 12 hours from now. Anyways, now let's talk about what's happening with the markets. Unfortunately for NIO, I'm seeing a clear head and shoulders like pattern that's developing. If we lose the support at $5, we're going to be looking for a dump back down, which would take us all the way down to the lows, all the way down to like the fours, I basically mean. So it's looking a little bit more bearish in terms of the setup, especially as the whole market is selling off. The market might attempt to rebound a bit for tomorrow, but there's no guarantee the move is going to last because we have mixed earnings so far. So let's talk about this data real quick, then I'll break down the charts. Looking at the stock heat map, you guys could see that the market got a big sell-off. We saw tech sell-off, we saw financial sell-off, and the whole market basically sold off. This happened amidst Microsoft seeing a big sell-off after earnings. Same thing with Meta and the others. Big tech is what led the way down, and then on top of that, the market has seasonality. The whole market basically followed the same trend because it was due for a pullback, and that's how the algorithms took over. The next catalyst, though, that's going to be affecting the market would be earnings. Just know this: today is Thursday, October 31st, the last day of October, also known as Halloween for those who are in the US. Just know that after the market is closed, we just got Amazon and Apple announcing earnings, and things are kind of mixed. So Amazon is pushing quite a bit because they got some good earnings. We got, once again, a nice beat on EPS and revenue, so not bad whatsoever. EPS was at $1.43 above expectations. Revenue is quite good. Amazon Web Services was close to expectations, and then advertising was not bad as well. But what's very, very good is the fact that their guidance is quite decent. This is looking at some nice growth going into the upcoming quarter, and that's making people very, very excited for what's about to end up coming out. So we're looking for a 7 to 11% year-over-year growth, and that's why the share price is up right now. That's why Amazon's pushing 6%. This could be a catalyst to help the market push a little bit, but on the other hand, Apple's down 2%. So Apple's actually down after its earnings. They beat on most earnings, but unfortunately, their overall guidance wasn't as strong as what investors were looking for. And let me clarify. So EPS was a beat at $1.64. Revenue is a beat at $94.93 billion. iPhone revenue is at $46 billion. But when it comes to Mac revenue, iPad revenue, other product revenue, everything else was kind of like below expectations. So these were all a little bit below. If you look right over here, starting with the Mac revenue, these were below expectations a little bit. And then gross margins were kind of flat. The share price was up a bit, but then what happened was they announced that they're projecting single digit growth, and that was a little bit below what a lot of these analysts were expecting. They were hoping for like 7 to 11% instead of just 6%, and that's the reason why we ended up seeing a bit of a dip. So not the best of news for Apple. That's why the share price is down a little bit. Guidance wasn't as strong as what we were looking for. So now the second factor involving the markets is going to be some jobs numbers. Tomorrow before the market opens, we have the unemployment rate coming out. That's going to be very important, not to mention the non-farm payrolls, so we'll see what that leads to. The fear and greed index is currently at fear. That's making up the majority of sentiments. There's a lot more sellers entering the market. And despite that, NIO is announced that they're opening more of these power swap stations across Europe. They have 57 in Europe in total, 19 in Germany. So not bad, especially since it's near some major highways. But the issue is that it's not really enough to get the share price moving. Maguire is saying NIO will eventually outperform the market. The price-price ratio is still declining, and then we have other things such as seasonality that's kicking in. Thursday has about a 49.74% green percentage, so just keep that in mind. And then volume is also at 50 million, so we'll see how things end up going. As far as NIO goes, we have a head and shoulders-like structure. Looks a little bit more bearish, especially if we lose $5 tomorrow. Might see a little pop tomorrow morning thanks to Amazon's earnings, but then the odds are favoring downside in the setup. So I want to give you guys a heads up about that. I'm actually a little bit more bearish on NIO because of this. As far as SPY goes, we've dumped toward our 4-hour 200 EMA, but there are buyers trying to defend it. So there's a chance we try to rebound a bit thanks to Amazon's earnings. Apple is not that positive for the markets. And then another factor is going to be the unemployment numbers. We could attempt to rebound, but I still think that there is more downside potential in this chart, especially as we have this gap down here to fill around the 564 area. So it might rebound a little bit and then continue lower later on. I think that there is a risk of more downside. I also want to call out the fact that we are starting to break out of the wedge. So we had this rising wedge right over here. You guys can see we had a rising wedge, and now we're starting to break out of it. So it's a sign of weakness on SPY. We're barely at our 200 EMA on the 4-hour time frame, but there are gaps to fill below, and we still have some more downside metrics, so that could lead to more downside. As far as ES goes, we're looking more bearish. We're barely at the 5750 area. 5725, I mean, is where our support is. If that fails us, we're going to be dumping more. May rebound a little bit thanks to Amazon's earnings, but I still don't think the downside metrics are done because over time I do see us coming down to fill this gap towards 5644. So keep that in mind. For Nvda, we're attempting to rebound. We could be trying to retest 136, maybe try to get a little bit higher, but there is a risk of us getting closer to our 200 EMA towards the 128 area. Yes, it could push a bit, but then there is that risk of downside. Looking at others out there, such as Bitcoin, we're trying to hold 69,650, our 50 EMA. We could attempt to rebound off of that to hit 70,000, 70,500 at the least before it continues to dip. So watch for that. There is still that risk of the downside. Tesla's dumping to about the 249 area. Could bounce a bit off 250 thanks to Amazon kind of consolidating the low 250s before it continues to sink down to about 246. So there is that risk of downside on Tesla. For NQ, we're barely at about 20,000. Amazon could help this attempt to rebound also the jobs numbers to get closer to 20,100. Might get a little bit above that, but then there is that risk of us rejecting. And don't forget that we still have these metrics that remain. So don't forget there's this big gap to fill down here in the 19,000s. I think we will eventually come down to fill that gap. Might pop first, try to retest our 200 EMA before it rejects and starts dipping down lower to fill that gap. Still remains more bearish. QQQ still has that gap to fill at 475. We will eventually get there. We're testing 484, which is our 200 EMA. Might try to rebound a bit before it continues to dump. So watch for that. Apple's looking more bearish because there are sellers stepping in after they announced that their growth is not as strong as what we were expecting. That could lead us to dipping towards the 216 area. So look at 220 support and then 218, then 216. We have 222 as resistance. Might rebound a bit before it continues to dump, so watch for that very carefully. For the IWM Russell 2000, we're also looking a little bit more bearish. Could retest 218.5 before it continues to fall for the 214s. For Amazon, we are more bullish. We could be on our way up closer to 200. So it is looking like it's going to outperform the markets. Meta's looking more bearish, might be dipping for 559. Look for a test of 570 to 575 and then a dip back down to 559 after that. Microsoft looks more bearish, could retest 412, then continue to sink. And then Google's also a little bit more bearish. We could try to retest 175 before it continues to fall towards 170. So give this the time that it needs. That's what we're seeing from the charts so far, guys. So I do want to give you guys a very, very blunt, insightful update, which is the fact that we do have a head and shoulders on NIO. It's bearish. This is going to likely lead to downside. It's almost perfectly symmetrical. Could pop a bit tomorrow morning, but then I do see a risk of this dumping. So please keep that in mind. My job here is just to be very unbiased when I say the things I say. So I thank you all for listening. I hope for the best for everyone. So please enjoy the holiday, enjoy Halloween. And I'll be back very soon with another video for tomorrow. Thank you for listening and peace out.